We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol SOXL. Make sure you're following us on X at Bullish Chips. That way you can keep up with our real-time entries and exits on not only scalps and day trades, but entries and exits on longer-term and mid-term swings. We want to take a second to remind you we are not financial advisors. We do not offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but we also like to give our opinion on where we think price action might take us in the future. Today is July 22nd, and we're looking at the day chart here. We had the downside action that we were looking for. If you remember in last night's video, we talked about how the day finished and what particular levels and markers were aligning to indicate that we're probably going to get a pullback. We stuck to our triggers, targets, and extended targets to execute to the downside today. We then used our levels to enter longs for the bounce. Bounce didn't go quite as high as we would like it to have gone, but we still were able to get profit and then enter into some puts to swing overnight. So all in all, a good trading day. We were able to take profit both to the downside and to the upside, didn't take any losses, and price action did what we had a good or a stronger opinion that it would do. And not saying that we predicted where things would go, but when price action did start to head in the direction that we had triggers for, we were able to capitalize on those triggers and execute to get that profit. So we're still up here in this daily broadening formation as signified by these orange lines. If you want more detail about the levels that you're looking at here, the different colors for the lines that we have for the different markers that we have, go ahead and check out the description of this video, and check out the video that we have for setting up levels for precise trading. But right now we're in this daily broadening formation, as again I signified by the orange broadening formation lines. So we went high, higher high, low, lower low, so we were expanding the range. Went slightly higher here, and we could actually draw a broadening formation if we wanted to, because that did mark another high, and we're going to the low. Right now it doesn't look like we're going to make a lower low. We did finish in more of a hammer formation, not quite a hammer, but more of a hammer formation. The wick is just slightly longer than the body, but it is still red, so we can't take downside action off of the table just yet. And actually, as we're sitting here in after hours, we're down $1, which for SOXL, because it's only a $26 stock, being down $1 is down 3.76%. So the puts that we bought to swing overnight, right now they're in a good position. As I started the recording for this video, it looks like there was a traded deal announced with Japan, so that could positively affect the markets for tomorrow. So this could be the higher low, which could signify returning back to an uptrend. Again, we have, let's take this out of the way. We do have the year flip right here at 28.13. This would turn the year green. So if you look at the upper right hand part of the page, let's get that stuff out of the way so it's a little less. You can see the day was red, the week is red, the month and the quarter are green, the year is red as well. If we get back above the week's open, which is right here, yesterday's open, 27.56. If we get above 27.56, that changes the week to green. So we would have, obviously, the day would be green, the week would be green, the month would be green, the quarter would be green. And if we're able to get up that much further above 2813, that puts the year back green, and we're in full time frame continuity to the upside, giving us more of a bullish look, and we'll be looking more for the uptrend to continue more than we would for a downtrend to kick in. I mean, we could always get sideways action for a little while, but full time frame continuity to the upside or to the downside. And once you have full time frame continuity, that's where a lot of times when you want to go maybe a little bit longer, whether it's in the upward or downward direction, but further out on your expirations on contracts you buy, and are able to swing those because you have price in all time frames, at least on a macro scale, are going in one direction, and so that's a good amount of momentum to have behind you. So it would be nice to flip the year green and get the full time frame continuity to the upside, but this is turning out to be a line of resistance, as we mentioned previously. Not just because it's the year flip, but you can see it coincides with the bottom of a range here, where there was a lot of chop and up and down, not a lot of just pure trending out of there. It was to the top of the range, to the bottom of the range, to almost to the top of the range, to the bottom of the range, back up before it finally broke down. But it's more of a choppy area, so it coincides with the year flip. Again, we're still dealing with this monthly downtrend line, which is this green dashed line, and we are still contending with this weekly broadening formation, which is this solid purple line. This dashed purple line is a weekly uptrend line, but you can see it is narrowing. So some people may call that a rising wedge, or whatever you want to call it. That is a rising wedge is more of a bearish indicator, but again, we're not going to be doing more than scalps or day trades, and maybe even one night swings like we ended up doing today with puts, just because we have not actually put in a downtrend. We have on the 4 hour, if we go ahead and look at that, we made a lower low today. So this on the 4 hour was the uptrend. Of course, we had the high, then the high, a soft low to a higher high, which this higher high was higher than this high as well as that high. But this was more of a soft higher low, so it would have been nice to have held that. It would have been much more bullish, but this is really, to me, the low that we need to be worried about. If we make a lower low, so be it. That's just expanding the broadening formation. But if that ends up making us make a lower high, now we're looking at maybe a week long swings in the downward direction. Maybe only holding for a couple of days and gathering what it is, but maybe you let it run the whole week. Again, we're not buying a weekly contract. We would be buying an August monthly at the very shortest, just to give us some time and not too much theta, and maybe get some quicker downside action. Maybe we fill this gap, bounce off the 200-day moving average, just wicking below this weekly uptrend line. We could find support here. If we go back to the right, let's get more days on here. If we go back to the right, this was like a area of resistance. A lot of times areas of resistance turn into support, so that lines up with the bottom of this gap, which again would be support here and here. So frankly, I would welcome some downside action, as long as the week doesn't turn into a downtrend. Then I'll take a daily downtrend just to give us like a 2 down on the week. If we go ahead and look at the week, we're real close to going 3 on the week, or engulfing on the week. So let's take a look here. So here's the weekly candle, right? So we did breach above, so we did go 2 up, but you can see the low is right here, not too much higher than this low. So we could go 3. If we go 3, then I would be looking for a 3 followed by a failed 2 down the following week. So next week, having downside action, recovering by the end of the week, putting us in a hammer type of situation, possibly even getting back up into the 3, higher into this 3, to give us a 3 2 down 2 up reversal, which once you breach one side of a 3 and you get back into the 3, the target is to breach the other side of the 3, which hasn't been breached. So this 2 would be a 3. We would have breached it to the downside, so the next target would have been the top of the 3 for the 3 2 down 2 up, 2 up possibly in 2 weeks, getting us back to this year flip and possibly pushing us above. That would keep us in a weekly uptrend, right? Because the 2 down would be a higher low. We have until about 20 until to be able to make a higher low. So it could come down, fill this gap, and before actually making a lower low, turn back around to give us some type of hammer. So that would be a decent pullback. It wouldn't be for the faint of heart. It's right now we're at 26. That would bring us down here to like 22. It's not too bad. It's a pretty big dip for SOXL because again it's only $26 stock, and you can see how today just being down $1.18 is down 4%. So like a 20% dip right here. But if we do get a 20% dip, you best believe that as soon as something triggers a reversal back to the upside, I'll be jumping in. You don't need to be at the bottom of the move, so you don't need to be trying to time the bottom like, okay, I think the bottom's in, because it could always go 3 2 down 2 down. You never know. And then what if we do create a lower low on the week and come up and create a lower high? Then we are in a real downtrend, maybe possibly trying to go fill this double gap right here. Again, that's getting a little ahead of us ourselves right now, but we need to keep in mind where things can go if things do start to break down. We go down here, and if we close this double gap, wicking through this weekly uptrend line right here, this purple line, we could wick through that, close that gap, or maybe even just bounce off at the top of the gap. If we go back and look at the month, that gives us a higher low on the month, right? So this would 2 down, that if we fail and go back up, that gives us a higher low right here. Our month is still in an uptrend, right? It would be a big pullback, but the month would still be in an uptrend. Well, it would be creating an uptrend, we should say, because it's not still in anything. It's attempting to reverse this downtrend still, right? It looks like it's bottomed, but we haven't cleared this 3. We haven't made a higher high on the week chart, and then our second higher high is up here, but we haven't even made it higher than this high. So no trend has been put in, but maybe that's what we need, is for the month to go 2 down so that we can get that higher low on the month and give us a more confidence that an uptrend is in, and not just some dead cat bounce. But again, the week, so if we were to go 2 down, make a lower low on the week, we would probably come up, make a lower high, which would give us the further push down. And who knows, maybe we even go down here to close these gaps. That's a big pullback, but it could happen. You never know what the Fed might decide on rates, or any other tariff issues that might come up. Anything is on the board, geopolitical issues. So just like I said yesterday in my video, I hadn't talked too much about downside targets. I have them for myself, but I haven't talked about them much on videos just because of the price action. Again, we're 7 weeks in a row to the upside. This if we turn green on the week, it would be an 8th. So we had good velocity, but we are hitting this major resistance area, and we're starting to get that pullback. So I guess kind of enough from the wide view right now. Let's just kind of talk back more about the day and our entries and exits. We got the pullback, at the gap down at open, and if you go to our X account, you can see where we entered on the lower high. So when we got the this 3 was a 2 up at one point, and then we took note once we went 2 up. As long as we stayed below this 2, we were making a lower high, and instead of just getting the 2 up 2 down, we got it all in one candle. So it went 2 up and then went back to 3. As soon as we breached the low of this candle, we entered. If we go to the wrong chart. If we go to this day trade chart, you can see we went down. We already had puts that we were swinging, and we entered some more right here. We added to them right here. We closed the ones that we swung when we hit last week's 50%, this 2669. And then we closed the rest of the ones that we entered up here. We closed them at last month and last quarter's high. Yes, it did go down a little bit further, created a new hourly broadening formation that wasn't there earlier in the day. So it wasn't like we had that as a reference point. After this was the week low, and I didn't think that we were going to do that all in one day. So I went ahead, and because they were for next week, actually no, they're for this week. I'm sorry. They were for this week. I went ahead and let those go. We watched price action. We got the one here and the two down, which barely ticked down, two down, and finished this green hammer. And again, if you go to our X account, you can see that we said that we were entering on 1 2 down 2 up. We got in as soon as this 2 up triggered. We rode that up to, we didn't get that much out of it. What did we do? Yeah, so we didn't sell at opening print. That was like a, I don't want to say a phantom print, but it was just like a quick 1 minute candle. So we didn't capitalize on that. We didn't have like a limit sell set up here. So we were able to still ride it, but we did, once we made this lower high right here, we went ahead and exited, because I personally thought we were going to possibly turn back down because on the 15, it did do this 1 2 up and then this one, and it triggered 2 down. And yes, I knew it could have went 1 2 down 2 up, but if we look at internals at that time, let's see, what time was that? This was 10 o'clock. So if we go to 10 o'clock here, internals were still neutral basically on the 0 line. 10 o'clock, really these internals were negative. 10 o'clock volume was starting to push up. So this is, I'm sorry, this is volume. Volume is negative. This is breadth, and this is the tick. So the tick at 10 o'clock was still really neutral. The volume was, the vol QD was actually negative at that time. And although breadth was positive, it was only 500 600, and trend higher is 1500. So there was nothing bullish about internals there. And because we already have calls that we're swinging, there was no reason to be reckless. Now the calls we got here on the way up were for next week, but there was no reason to be reckless with them. We went ahead and took our profit. If they continue to go up, great. Our swings would continue to get some price action back from the drop overnight, and just really the past 3 or 4 days where we haven't got the push up that we really needed. We did to get that higher high on the day, but it was only for so long before the day closed as a gravestone doji. So just looking back at this, we did not take the 1 2 down 2 up here, which again I'm kind of glad. And the reasons were we're below we were below the overnight low at the time. We were below the last week's 50%. We were below opening print. We were below previous low a day. We were below overnight. We were below everything. And so just because we had hit last month and last quarter's high and looked to have been bouncing didn't mean that it was going to take hold, right? That could have just been a dead cat bounce and we fall back through. Now we didn't fall back through. We ended up going sideways, kind of a nothing burger for the rest of the day. So after we sold our calls, we just kind of watched price action on the 1 2 up 2 down on the 15 minute. We tried to get ahead of, what time was that? That was interesting. Yeah, so I thought because, yeah, okay, that's what it was. So this is 12:30 on the 15. This was 1 2 up 2 down. Yeah, so this is like 1 o'clock. So we had this big inverted hammer, um, and on the hour, you know, it wasn't bullish by any means. Huge wick. So I took the 1 2 up 2 down on the 15, looking to have it domino into a two, this 2 up 2 down. It never went 2 down, but we held them. The puts are for next week, and just because the action just wasn't bullish, right? So after that we got an inside bar and then another inside bar. It's just consolidation. So when you take and look at the 4 hour, again, let's get us a cleaner chart. We made the lower low from this soft low here, and it was just a one, just in the middle. Yeah, it was green, but it was a doji, and it's in the middle of the previous 4 hour candle. So there's still easily room to go 2 down. I mean, we could still go one 2 down, 2 up, right? So we could go 2 down, make an equal low, even make the lower low, bounce off the daily broadening, the support of the weekly uptrend, the support of last month and last quarter's flip, using all of that to make a failed 2 down, bounce back up, we go 2 up, and we continue the broadening formation. That's a total possibility for tomorrow. But we could also just go 2 down and just people start to just really let it go. I'm looking. Yeah, I mean, it's gained some price back, but SOXL is still down 3%, 3% in after hours. So not the most bullish thing that you can rely on. So I'm not saying we can't get action to the upside tomorrow, but it would, we're not necessarily looking for the downside action, but we are primed and ready for it. We have our levels. Let's go back to make our 4 hour markers. So let's remove today's opening print from the swing chart, go to the day trade chart, and let's move our 4 hour markers. So the 4 hour trigger down goes to the low of the second 4 hour of today. The previous low of day from yesterday goes to the low of today, because tomorrow that will be previous low of day. Let's remove the opening print. Let's take the 4 hour trigger to the upside, put it on the high of the second 4 hour of today, and let's take the previous high a day from yesterday, move it to today's high, and just like that, we've got our 4 hour markers. Again, if you want to know more detail about what these 4 hour markers are, how we use them, go ahead and check out the description of this video, and check out the video for precise trading. It has details about the colors that we use, the levels that we use, why we use them. Again, these are only for scalps and day trades. We're not using them to help us enter swings overnight, or any long-term swings. It's just purely for scalping and day trading, and the accuracy that you get with these is pretty amazing. So if you're not familiar with it, check out the description of this video. Check out our other video. Remove price action. Okay, so now that we've got our 4 hour markers moved, let's get this a little bit more in perspective. All right, so it's a bit tight, but when you get in here and you're on the 5 minute and you want to know where's the overnight low, it's right there. There's last week's 50%. There's the trigger for the 4 hour to the upside. There's previous high a day. There's the 4 hour trigger to the downside. There's the previous low a day. When you're in here on these smaller time frames, trying to get an entry for a scalp, it really pays off to have those levels marked out. So you're not having to, okay, I see what's here on the 5. Let me zoom out and see what's on the 4. No, you already know what's on the 4 because you already looked at it, and you have those drawn out reference points, right? So very easy. And then when you combine them with the notes that we're about to make here, you can become pretty freaking deadly when it comes to scalps. So we've got our chart here. Let's go ahead and bring up our notes. Oops, wrong button. So let's bring up our notes. These were the notes for today. Duplicate note. And then if you are new to the channel and you are not familiar with the notes, go ahead and check out our video from last night, or any previous video. Look at the notes that we have, the triggers that we have, the targets that we have, the different markers to let you know when full time frame continuity. Go ahead and check out our notes from that night, and then go look at the price action for the following day and tell me our price action isn't accurate. I'm just saying, I'm willing to put it up against anybody else's system, right? Not saying you can't use another system, because everybody has their own system. This system I used is a combination of a couple of systems, the strat, along with some of these 4-hour indicators that I picked up from Trade Brigade. So make sure you have your own system, you follow it to a T, make sure it works, back test it, and then put it into real action, put money behind it, make sure it works. Once you've established that system, don't veer from it at all. Don't veer from it at all. I would not be making this channel. The only reason why I'm making this channel is because I found a method a couple years ago. I stuck to it, and I'm still kind of, to this day, after decades of investing, kind of amazed at how accurate I've become with the price levels that I have for not just trades, but this extrapolates out to investing as well. If you're not dollar cost averaging and just putting, buying, say $100 of shares every week, or $500 of shares every week, or $1,000 of shares every week, if you're not doing that, then you're looking for good entries. And I'm not saying that you can time the bottoms, but you can be ready that for when those pullbacks do come, when to put down your bigger chunk of money, because it's, if not the bottom, it's right where things are triggering to indicate things are going to go back up. So you're still getting, if you're not getting the bottom taking the move. Yeah, you're not getting the very, very bottom, but you're getting 90% of the move still, 80% of the move at least, 75, I would say at very least. Because if you're watching those reversals, especially on the day and on the week, then those longer contracts you can enter for when a month and a quarter flip back to a specific direction, you can be ready. So if you want to short the market, where your targets are for your shorts, and how long you might need to get to those targets. So this method can be extrapolated out, like I said, to all types of investing, not just scalping and day trading. So let's look at these triggers for the 4-hour. So tomorrow, if we get a 2, if we're going to go to the downside on the 4-hour perspective, to trigger that, we would have a 2, 1, and then a 2 down. So the trigger would be the bottom of this 1, which is 25.98, and the magnitude would be the low of this candle, which is the candle to the left of the 1, which is 25.34. Right. So remember, I guess just to retouch on these notes. Oh yeah, we closed at 26.32. So let's get our close price in there. But we know that because the week will flip green at 27.56. We know the week is red, the month is green, the quarter is green, and the year is red, right? Because these are what it takes to flip the week green or flip this month red, right? We have the range for the week, which was the expected move was $2.69. So where it closed on Friday, if you add 269 and subtract 269, you get a range of 30.02 to 24.64. We're right there in the middle of it right now. We've got our gaps above and our gaps below to remain aware of, and then we're back into these 4-hour day and week triggers, right? So we know in July we're in this combo 2 down, combo 2 up. We're risking falling out of it. 25.84, we fall out of that continued strat, which is the same for the quarter. We are in a 2 down, 2 up. So we want to remain above 25.84 at the very least. Keep the quarter and the month green. That way, if we're above those, then we're that much closer to the year flip, 2813. And so the week, it can kind of flip flop around, but we want that month and that quarter to stay up. If they do come out of the strat, then if it goes back into the strat after dropping out of it, then a lot of times that's when you get that second push and you can go ahead and finish out strats and reach their magnitudes. But again, I'm kind of veering off from where we are. Let's make sure our notes are correct. So that would be for a 2 down, green 1, 2 down, right? So it'd be a 2 down, green 1, 2 down. The trigger is 25.98. The magnitude is 25.34. Let's go ahead and get some extended targets out there. 24.91, which is last week's low. We'll use that, which we already have here. And we'll get one more extended target of 24.38, which is the month and quarter flip. Right? Our lower lows on the day are on the 4 hour, 24.91, 24.62, 23.58. So we know, you can see how they're kind of lining up. The lower low, 24.38, that's a little bit lower than that, but they're all kind of starting to line up. Let's look to the upside. We would have a 2 down, green 1, 2 up, right? 2 down. Let's make these candles a little fatter so you can see. This would be a 2 down, green 1, 2 up. To go 2 up, we would have to breach this up trigger of 27.01. 27.01. And this magnitude would be the high of today, which is 27.28. 27.28. So an extended target would be this weak flip, which is 27.58. 27.58. And then I would say the year flip, 28.13. 28.13, 28.46. Oops. 28.46 is last week's high. And actually, we'll make it 28.50 because that's this higher high on the daily. So we'll make it 28.50. So we got the higher high of 27.90, 28.46, 31.96, 32.64. So anytime we have a strat on the 4 hour, we know that the magnitude of that 4 hour is then the trigger for the day. So since it happens to be a 1, there's a strat to both sides. So the magnitude for the for the down trigger is also the trigger to the downside on the day. The magnitude for the 4 hours is the trigger for the day to the upside. On the day chart, if we look here, let's go to our swing chart. On the day chart, we can see that it would be a 2 down, 2 to the downside first would be a 2 down, 2 down, or a combo 2 up, combo 2 down. That's what we'll give it. Combo 2 up, combo 2 down, trigger 25.34. That's the low of this candle. The target being this low, which is 24.91. 24.91. An extended target would be the 24.38. 24.38. The further extended target would be, it would probably be this last 23.50 is last year's low. This is 23.58. So 23.58. Alright, so there we have our trigger, the magnitude, and extended targets. On the day, the lower low again is 24.91, basically matching up with the 4 hour. Let's look at the day, would be a 2 down, 2 up. So if this triggers to the upside, it would be a 2 down, 2 up. Trigger being today's high, which is the magnitude of the 4 hour, 27.28. The magnitude would be the high of yesterday, which is 28.50. So magnitude 28.50, and then we'll leave our extended targets where they are, right? And again, we on the week we triggered the two up, but we're no longer above 28.46, so we're not in it anymore. We just leave it underlined to let us know we did trigger it at one point, to let us know that if we do go below 24.91, that's a red 3. That's something we want to know about, is any 3s out there. Because we're still in this combo 2 down, combo 2 up strat, it's underlined and bolded on the month as well as the quarter. We didn't trigger the 3 on the year yet. It's going to be pretty hard to do. It's up at 70. But these are our notes for SOXL tomorrow. We know what needs to happen if it goes below 25.98. We need to know what it needs to happen if it goes above 27.01. Anything lower than 27.01 and higher than 25.98, we're getting down to our 15 minutes and our 5 minutes, and we're scalping and looking for anything that could domino into something on the 1 hour or the 4 hour. Now remember, the 1 hour, we're still in a downtrend. We haven't broken the downtrend on the 1 hour, right? So we actually still got a little ways to go before we would break it. So if we're opening, let's see, if we're opening at 25.40, if we're opening down here, that's even more room to have to push up before it can still be rejected by the 1 hour downtrend line, the last week's 50%. So we're not out of the woods yet to the downside, and in fact, I'm expecting more downside. We are already getting it in after hours, not quite as much as we were before. We can see it's bouncing back some, and actually we'll go ahead and go in here and mark our overnight highs and overnight lows. Again, they'll probably need to be changed in the morning, but we'll get a head start on them and just go ahead and move them now so you can see kind of bottomed out. This is about the time, right around here is when the Japan trade deal was announced. We've gone up from there, but it did get a little bit of a pullback. So again, not getting ahead of ourselves. Oops. Also, Texas Instruments, they reported after hours. I need to go actually listen to the call. It looks like they beat their expectations, but they must have had poor forward guidance, because I know at one point they were down 10%. Let me take a look. TXN, oh wow, they're down 12% now. So TXN is a part of SOXL. Hopefully everybody knows that. If not, make sure you're going and checking not only the top 10 holdings of SOXL, but all of the holdings for SOXL, so you know exactly what's in there. TXN is a top 10 holding, but it's not a huge holding compared to like Nvidia and things of that nature. So let's go to the day just to wrap up our chat here today. So again, just back to the day chart, we see where we've closed. Somewhat of a hammerish candle, but not really. It's still red. And again, in after hours, we're down. So I hope everybody was successful in trading today. I hope everybody sees how the levels were respected that we pointed out last night. We went ahead and used that to our advantage to make profit to the downside and to the upside, as well as enter swings for the downside overnight. We'll see where they end up in the morning. If we end up being breaking even or even a little bit negative, then so be it. We'll take a small loss, but for right now they look like they're in good shape, and we'll be looking for lower highs, especially on the 1 hour intraday tomorrow, to enter more puts if that's the case. Otherwise, if we get a higher low on the 1 hour, look to grab some more calls. Not necessarily to hold for a long time. It'll probably be an intraday trade, but it could turn into an overnight swing or something like that. So don't handcuff yourself by buying a weekly. Get something at least for August 1st, and even after Wednesday, you want to start looking at possibly the August monthlies, or at least the second week of August. But the August monthlies will probably move a little bit better because they have higher open interest and volume. So um, that's what we're looking for. Anything to the upside with caution, but expecting downside. And we've got our downside indicators, our downside triggers and targets marked out, and we'll just wait for price action to tell us which way we need to go tomorrow. So I hope everybody enjoyed this episode. If you did, give it a thumbs up. If you have any comments you'd like to make, let me know in the comments. If you disagree with any of my analysis, I'd love to discuss it respectfully. I'm open to any comments. I'm not going to close the comment section down, but just try and be respectful when you're providing your criticism, and I'll be glad to engage into a conversation if that's what we might want to have. But I just want to build a community of people who can take this ETF of SOXL that has very cheap premium for a very good delta to theta ratio, and just make money off of it every day. We have our separate investments. We have our individual stocks, ETFs, closed-end funds, T-bills. We've got all kinds of investments, but I wanted to make this channel just as kind of like a little niche channel where anybody can come and just find a way to basically make a little second line of income for yourself, because of the liquidity that are in these contracts, and again the cheap premium for the delta and theta that you get, which allows you to load up on contracts. And if you're not as confident in your levels just yet as what we are, then you can take the time to scale in and scale out of contracts, just because of the premium that you're paying is so low. So you've got great delta within the actual stock, so you get big price movements fast, especially when you have a full trending day, or if you're in a trend on the day and week, you get these big movements like you see here off the bottom, or just even within the last 7 weeks, which is right here, 7 straight green weeks. So I just hope that everybody is out there and able to profit off of SOXL. If you need any help, let me know in the comments. If you think I need to add anything to these videos, let me know. If you think I need to take anything out of these videos, let me know. But just make sure you subscribe, leave me your comments, like the videos if you like them. It's free, and it'll help this channel grow. So I hope everybody has a great rest of your night. Make sure you get some good rest so that we're ready for the trading day tomorrow. And I wish everyone the best of luck during the trading day tomorrow. Make sure you're following us on X at Bullish Chips, and you can see our real-time entries and exits throughout the day. All right, have a good one.